Hey everyone, how y'all doing? This is episode 32 of Stock Talk with Josh and
Niko,
Niko. How you doing today?
really good. I'm happy to be here.
Usually I'm on the other side. Like I started off being on this side, but I'm
hmm
like on the other side now. It's like, man, now I miss you for some reason. I miss you. But besides me missing Niko, how's the stock market? Actually, not even stock market, but just how your stocks are looking right now.
I'm still down a lot from where it was 6 months ago, but at the same time, the past a couple days this week, my account was actually up, 4, 5, 6%, and so it helps a little bit when you see some green in your portfolio, but I still have a long ways to go to get back to where I was.
Yeah, me too. I think everyone's just about down in the stock market. You can name it from, I don't know, 18-year-old to with no money, with barely any money, to a billionaire. We're all kind of down in the red for the stock market. But we do have a guest for episode 32, and his name is Vince Kisala. So, Vince, can you let the people know a little bit more about yourself, too?
Yeah, hi guys. I'm Vince Kisala. I'm a real estate broker with DApro Properties, and I specialize in investments in rental properties. So I've been doing rental properties since around 2000, and I became licensed real estate broker in Indiana in 2014.
Okay, not bad. So I want to get a little bit more background, a little knowledge over you. So what actually got you into the real estate stuff?
So I was living in Chicago, and I started seeing these condos in the South Loop, which was an area that you probably didn't want to be walking through at night, and they were going really cheap, but I kind of saw that they were getting better, so I started in that area, and sure enough, I was able to pick up some condos there really cheap and rent them out, and it started to be a business for me on the side of my IT business. I was doing the real estate, and then it just kind of took off from there little by little.
Well, I will say that was a great choice because look at the South Loop now. It's kind of completely changed to even a better neighborhood now. So that's pretty cool, pretty cool. So what year would you say you started like in 2000 in Chicago? When did you move out to Indiana now?
So we moved to Indiana in 2004.
Okay. So where was your first like rental property in Indiana?
First one was Porter, Indiana, and that was a duplex. That was my first taste in Indiana.
Okay. And another question I have is what would you say is like the big difference between like the Indiana housing market compared to the Illinois market?
So biggest difference obviously is the taxes. In Cook County, taxes are outrageous. In the condo markets, you're paying.
Some will call it Crook County, but
yes,
that's another.
yes,
That's
absolutely.
another.
But yeah, that's brutal with the taxes, and then the HOA on the condos is pretty high too. So even though you can make some money, it's a lot easier in Indiana.
Okay, and with 2004, was your like? Do you usually do like more apartments or more houses?
So when I was in Chicago, it was all condos, but when I moved to Indiana, it's either single-family houses or two flats here in Indiana. I'd like to get into some bigger 4-unit or apartment buildings, but there's really not much coming available. People hold on to those pretty long.
Okay, and another question is like, how do you think the market is now, like compared to when you first started or like in 2008? Like, how do you think it is now?
Yeah, so this is a really interesting market right now, more interesting than we've seen. When the pandemic hit, we thought everything was going to fall apart and we were ready for a really bad year. But all of a sudden, everybody started looking for houses, and it just went crazy, and the appreciation just was strong. Since the pandemic hit, it's been super strong. They were dropping the interest rates to stimulate the economy, and that was driving the housing market even faster. Now we're starting to see a shift because they're raising those interest rates, but it's still a really strong and healthy market. And I think a lot of people keep saying that they don't want to buy now. They want to wait till the prices drop.
hmm
They think it's going to be like in 2008 when everything fell apart.
hmm
But that's one of the things I'd like to talk about today is to kind of go over the data and show you what is happening with the market today and what's the future going to look like most likely. Obviously,
Right.
nobody knows for sure, but all we can do is look at the data and make our own guesses.
Yeah, and I wanted to ask, like, I know we were talking about how the demand for housing is still strong, but do you think that there's any way that prices could actually go down over the next year or so?
So my guess in the next year is we're gonna slow the appreciation down. Where we were at 6 or 7%, we're probably going to see 1 to 3%
Okay.
in the next year. I don't think the prices are going to go down, especially in Indiana. I think that they're going to they're going to plateau, and they're probably going to be less demand, and we'll finally get our inventory back up.
Right.
But right now we're still low inventory.
So in other words, you think like the demand is so high that it will make up for the interest rates that are going up?
Yeah. So what's happening with the interest rates? Say that you got qualified for a loan for $500,000 and they raised the interest rate 1 point. Well, now you can't afford that $500,000 house anymore. You might be down to $400,000 house, but you still need a house to live in.
Right.
So now you're just looking at a different price range of a house.
Right.
So I think the lower price range houses are going to be in more demand because people are going to start qualifying for less money, and there's less houses in those lower price ranges.
Right. I see. That makes sense.
So, I guess we all most people think we're gonna have a recession, or if we not having a recession, we're actually are in one already. So, say if a recession does hit, that's very hard for just about everyone. You don't think the housing market will be affected at all?
Yeah, that's an interesting thing. I got a chart that I want to show you guys on the recession, the last recessions. Let me just.
Yeah, maybe we should pull up the PowerPoint.
Yeah, I'm gonna pull it up. Is it the one with the slideshow or just the regular stuff?
Oh, it's the one with the slideshow, and it's the one that's labeled. If you want to hop over to recession, doesn't equal a housing crisis. But this shows out of the last. This is the last 6 big recessions that we had: 1980, 1981, 1991, 2001, and if you look, 4 of those 6. During those recessions, the housing prices went up during those recessions. Now, what we're experiencing now is this hyperinflation, where we're seeing 8.6% of inflation this year already.
Right.
Now, people are saying, if I leave my money in the bank, it's going down because inflation's going up. But if you put it in the housing market and the housing prices go up, you're hedging against that inflation.
Right.
So we saw more cash in the market in the past 12 months than I've ever seen in my career.
Right.
A lot of people are taking their cash off the sidelines and putting it in the real estate with the hopes of, hey, at least it's going to keep up with inflation.
Now, see, you could also say the same thing for the stock market and say, in order to avoid losing out to inflation, I'm going to invest in stocks, right? But the difference, it looks like, is I think I've always heard that real estate you'll see the downside effects in real estate way after you see it in the stock market. So like over the past 6 months, we've seen the stock market keep going down, but the real estate market has still been strong. So it's kind of interesting how much of a delay there is in between those two markets.
Yeah, well, I think it all comes down to supply and demand, and we got to look at how many months supply of houses do we have in that particular area, and what's the what's the demand for it, and if there's not enough supply, that's going to raise the prices up when the demand is there.
So now, let's say before the pandemic, before interest rates were low, and before they printed all this money, do you think was the demand still super high back then?
We were getting to a neutral market there where the demand and the buyers and the sellers were about equal. We were at around 5 months, which is pretty level and steady. But then when the pandemic hit, we went down to 1 month, less than a month worth of housing inventory. And that means if we don't get new listings, everything we have will be sold in a month.
I see. The other thing I want to get your opinion on is, I know you're not as big into stocks as you are into real estate, but one of the stocks I own is Zillow, and I've owned that for at least a year now. So what's your opinion on Zillow?
So Zillow's got a lot of data, and they sell their data back to they get their data from the realtors, and then they sell their data back to the realtors. So it's an interesting company. I don't know if they're profitable. Do you know if they've been profitable?
Most of their quarters are unprofitable.
Yes.
At least they were in the past. Yeah.
So I guess their idea of their business is to get that market share and make everybody know them and like them, and then suddenly become profitable in the future.
Right. Let me check to see what their last quarter was.
Yeah, but I also feel like companies like Zillow, shouldn't they be they're more effective with how now we have is not that much the demand is high but not enough supply. So wouldn't that even affect Zillow too? Because people who are going Zillow, they're looking for houses and they're gonna be buying houses from Zillow. But if you're not buying any houses from Zillow, how can they even be proper? Well,
the interesting thing with Zillow is in the past what they did was say that I want to get leads from Zillow. So if Niko's a realtor and he lists a house for sale in Cherville, and I go and that pops up on Zillow, it's going to show 3 realtors right below it. Well, even though I might be the one that lists it, somebody else's face shows up on that thing. Whoever pays Zillow the money, their face shows up under the listing.
And they could get the sale then?
They can get the sale because the house pops up on Zillow. Then the buyer calls this guy that paid for the lead.
So then if you're an agent, it's not there's not a huge, there could be an incentive, I guess, to use it, but it could be, risky because someone else could get the sale.
Well, you don't have a choice. So when I list a house, other people's faces are going to go under my listing unless I pay Zillow to have my own face under that listing.
I see.
And then that's when it becomes like I say, like a pay to play thing, or like a pay to win thing. So
last year I heard that Zillow had over 200 million. I want to say 200 million people go on their website, and that's why I think one of the ways they make money too is through advertising. I want to say ads is a big one on there because they have so many people using their website. But and then last year we also found out that they were doing what's it called, they were buying homes themselves to try to flip, and that turned out to not be profitable, and so they cut that off last year, and then their revenue estimates dropped like 40% for this next year. So they've had lots of huge changes to their business.
Yeah. The other thing I heard that they're trying to do is actually have brokers work for Zillow. So Zillow would be the brokerage.
I see.
So I might work for Zillow, and instead of just sending the lead to me at my company, I'd actually be a Zillow agent.
Right.
So I know they're trying that in some markets, but I haven't heard how it's playing out for them.
Okay. So it looks like for the past 4 years, they have not had a profitable year. Okay. They did have, over the past 12 months, 2 out of the 4 quarters were profitable. So they have had profitable quarters, just not profitable years yet.
So another question I have is too. So say all this stuff is going on, and I'm trying to buy a house, or like me, I have a wife, 2 kids. I'm trying to buy a house. Yada yada yada. When do you think is the best time to actually get in there and to actually start looking for and purchasing a house?
So me personally, here we are in June of 2022. If I was thinking about buying a house in the next 5 years, I would say buy it now because I think that we're still going to see this inflation keep going. We're still going to see the rates rising. Yeah. I don't think the prices are going to come down. If anything, they're going to, like I said, they're going to level out or they're going to go up 1 to 3% a year.
Yeah.
But the interest rates keep going up. So every time the interest rates go up, you can afford less of a house. So you lock it in now. That's a 30-year fixed mortgage that you don't have to worry about it going up again.
Right.
One of the slides I got shows those interest rates over the past years, and if we take a look, people are worried that we're high right now. But if you look at the chart with the interest rates, we're really historically at a really low point right now.
Oh yeah. And the other thing it seems like is after 2008. There was like a new standard for interest rates almost, because it seems like in the past interest rates were traditionally a lot higher, and then over the last 15 years or so they've kind of been closer to 2% or 3%.
Yeah, in the last couple of years they've been super low, but if you look historically in the 70s we were at almost 9%, in the 80s we were at 12%, in the 90s we were at 8%. So we just started seeing these really low rates, and now we're hovering around 5.5%, 5 3/4 right now. So that's still a really great rate to lock in for 30 years. So anybody on the fence about buying, I would buy within the next 90 days before they keep going up.
I see. Okay, that's an interesting way to look at it. I'm interested in, Josh, can you pull up the beginning of his PowerPoint and let's start going through those?
Oh yeah. Okay. So we're going to be at 123 months of home price appreciation nationally.
Yeah, so in the last 123 months, and this is nationwide, home prices have gone up. And this is almost 10 years, 123 months of appreciation. So everybody keeps thinking it's got to go down at some point. But with this situation, I don't see it happening in the next year.
I see.
And again, I wish I had a crystal ball, but if I had to judge it by the data, we don't have enough supply to make that
I see.
price go down.
So in other words, you think like the home builders, the companies that do that, they're probably in a good position then. You don't think there's going to be a slowdown in their business?
I think the home builders were right now where they should be. They stopped building in 2008. because everything was falling apart. Why would they build? You know, so everything stopped.
Right.
But right now they're right at that level where they should be.
So do you think maybe there's going to be more of a increase in already built homes, maybe, and then new homes won't grow as fast?
Well, I think they're going to probably level out with the building of the new homes, and then we're still going to have that demand on the housing market with the number of houses we have now plus the pre-owned houses.
I see.
We're still in a shortage right now. But
I see. Okay.
I think the builders are going to slow down a little bit because of the inflation.
Yeah.
Okay. Well, real quick, we're going to take a quick break here for Stock Talk with Josh and Niko.